Hi everyone, welcome to a brand new episode. I'm Marcus and today we are looking at CISCO, ticker symbol CSCO. We'll cover the income statement, balance sheet, cash flow, key figures, our key feature, and the technical aspect of the stock. With everything that's going on with the economy right now, should we be buying CISCO? Well, let's take a look. So CISCO is traded on NASDAQ and now in the technology sector. If we go down to the screen, we can see that their market capitalization coming in at $165 billion and the revenues at $51.6 billion. PE ratio at 14, I like that. Profit margin at 22.9%, I like that. And price to sales ratio, I like that. And price to book value, I like that. So I like the valuation. They do pay out a dividend of $1.50, which is a plus, and the effective return coming in at 3.7%. I like it. Now I think we'll see much better buying opportunities as time goes on. Return on equity coming in at 29%. That is a plus, and return on assets is at 9%. That is great. I'm liking what I'm seeing right here. So the stock is currently traded at $40 per share. If you go down to the moving average, we can see that we are below both the 50 and the 200-day moving average. Basically, this is telling us that we might see the stock price decline. If we look at the chart, we can see that we have been moving in a negative trend channel for quite some time, and now we are seeing that the price is moving towards the support line. But we'll take a closer look at the technical aspect further down. But let's head over to the income statement. What we're interested here is that the total revenue went from $49.3 billion up to $51.4 billion. We can see here these numbers increased and then we fell off a bit, improved and improved. So that is a plus. Gross profit went from $30.6 billion up to $32.2 billion, and we can see here this number were improving, fell off a bit here, but then it started improving again. That is a plus. So we can see they had some hardship in 2020 and 2021. Net income went from $100 million up to $11.8 billion, and these numbers have been improving, fell off a bit here, but overall trend is positive. I like that. Now let's head over to the balance sheet. What we're interested in here is that the current assets versus the current liabilities. We can see that there is a huge difference between those two. Basically, if the company were to convert their assets to cash, they are able to pay off the current liabilities and still have capital left on the table, which is a plus. But they are far from being able to pay off the total liabilities, which is negative. And if we look at the total liabilities, we can see it went from $65.6 billion, and they have been paying off their debt over the last 5 years. That is just amazing. This is not what you see every day, so that is a plus. I like that. Outstanding shares went from 4.9 billion up down to 4.1, and we can see that these numbers have been dropping. Basically, they have been doing buybacks. So if you hold these shares or intend to buy this share, basically that means that your share of the company is growing as time goes by because they are doing buybacks, which is amazing. That is a plus. Cash flow, what we're interested here is that the operating cash flow versus the capital expenditure, and we can see there's a huge difference here, which is amazing. And we can see here that the operating cash flow went from 3.7 billion down to 13.2, and these numbers have been improving, but have of lately seen a bit of fluctuation here. So the operating cash flow is fluctuating between 13 to 15 billion dollars. That is a plus, but I would like to see these numbers improve, but overall development is positive. Capital expenditure went from 834 million down to 477 million, and we can see they invested a lot here, but have since seen lower and lower numbers. So the operating cash flow is fluctuating while they are reducing their investments in the business, which is negative. Now key figures here, what we see here is that the earnings per share went from 2 cents up to $2.87, and these numbers have been improving, fell off a bit in 2020 and 2021, but overall trend is positive. Revenue per share went from $10 per share up to $12.5 per share, and these numbers have been improving, fell off a bit here, but have since seen better and better numbers, so that is a plus. Equity per share went from $8.8 per share up to 9.6. We can see here we dropped here, improved, and have since better and better numbers, so that is a plus. Dividend per share went from $1.23 up to $1.51, and these numbers have been improving year by year. That is a plus, because I like those income, the recurrent income, also the fact that the income is growing year by year, so that is a plus. Dividend payout share, this is just too high, so 57, I like that, so this is great. So that is a plus. Basically, I like companies that pays out less than 60% of their capital, because I want some of the capital to remain in the business for investments, for acquisitions, or just overall strengthen their finances for uncertainties. But seeing that they are below 60%, that is a plus. Gross margin here we can see 62% and 62.7%, so a bit of fluctuation here, so we are fluctuating between 62 and 64%. These are still high numbers, and we need to compare these numbers across the industry and see how is CISCO doing compared to their competitors. But I would like to see them, even though they're still great numbers, I would like to see them try to be more efficient, find ways to be more efficient in order to reduce their cost of goods sold. Operating margin went from 26.4% up to 28%. We can see how these numbers improved a bit, but have of lately been seeing a fluctuation here. Same thing here, 26 to 28%. Still great numbers. I like that. So that is a plus. Profit margin went from 0.22 up to 22.9%. We can see here these numbers, or this is great numbers, but as I mentioned before, I would like to see them try to find ways to become more efficient, maybe reduce their operating cost and just improve these numbers, because it is great numbers, but it's a bit, it have stagnated, basically. That's what I'm trying to say. But overall trend, I'm liking this. Return on equity went from 0.25% up to 29.7%. We increased a lot here, but have seen a bit of drop here before we gained again, so that is a plus. Return on asset went from 0.10 up to 12.5%, and these numbers have been improving. Fell off a bit here, but have since we dropped here again, but have recovered in 2022. That is a plus. Now if we go down to the solidity here, we can see it went from 39% up to 42.3%, and we fell off here, but have since seen better and better number. Fell off a bit over here, but overall trend is positive. Balance sheet liquidity went from 1.6 down to 1.25, and we can see how these numbers have been dropping year by year. That is negative. Debt ratio went from 1.5 down to 1.3. We can see it increased, but have since seen lower and lower numbers. That is a plus. Basically, in 2022, when they had a debt ratio of 1.3, that means that the company had 1.3 times more debt than equity in the business. And seeing that these numbers are dropping, that is a plus. I like that. So guys, we have gone through the income statement, balance sheet, cash flow, key figures. Now over to our key feature, which is the stock analyzer. And what it does is that it gives you a simplified, holistic overview of the company's performance, and it saves you a lot of time. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. If we look at the screen, we can see right away that the valuation is below 20, which is a plus. They do pay out a dividend, that is a plus, and the payout share is less than 60%, that is a plus. And the dividends have increased over the past 5 years, that is a plus. And the number of outstanding shares have decreased, that is a plus. And the revenue increased over the past 5 years, that is a plus. And profit margin above 15%, that is a plus. And profit increased over the past 5 years, that is a plus. Current assets are greater than current liabilities, that is a plus. And solidity increased over the past 5 years, that is a plus. But the balance sheet liquidity decreased, that is negative. And the debt equity ratio have decreased over the past 5 years, that is a plus. And the total liabilities have decreased over the past 5 years, which is amazing. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance, and it saves you a lot of time. And you can have this software along with everything we've gone through, plus access to our discussion forum where you'll be able to chat with me along with other members for only $10 per month. So make sure to head over to commerce.sc and become a member today and support the channel. Okay, thank you. Let's take a look at the technical aspect of the stock. So here we have the chart, as you guys can see right away here. Let me just lay down some lines here. We can see that we have a support line, something like that, and also we have a channel, something like that. Let me lay down some lines here, and we can see another one somewhere here between there, something like that. Okay, so So we are more or less consolidating and have been doing so for quite some time. If we zoom out, you can see that. We can also see that we are now at a critical key areas. As you can see, the support line here around $40 per share. We have been here before. Every time we reach these, we come near these levels, we see buyers come back and push the stock price even higher. We saw that we broke out of this once here, and then we can see a bit of consolidation here. We dropped out of it, recovered a bit, but never had the chance to break back within the channel, and the stock price went down back to $35 per share before buyers coming in and pushing the stock price even higher. But now we are seeing that we are right at the key area levels right here, so we might see that the stock price bounce back within the channel upwards towards the resistance level here at $48 per share. But we can see that we have some resistance level here at around $45. So buying here, that would provide you with an opportunity of approximately 19% gain here. But with everything that's going on with the economy, I would like to say here, for me, for instance, this is a great company, great numbers, and a great outlook. So this is definitely a buying opportunity. But at the same time, with everything that's going on with the economy right now, we are seeing energy prices going up. We are seeing a strong labor market. So basically, that will give the Fed fuel, enough ammo to go ahead and increase the interest rates. And we are expecting to see a jump of 75 basis points. So let's see what happens over there with that. So we might see the stock price go down and start pushing back to $34, $35, and I believe there will be a lot of buying opportunity around here. I see it, the way I see it, everything below, but everything within this level, that is a buying opportunity. The more the stock price decline, the better buying opportunities that is, and the better margin of safety it is, because this is a strong and stable company with great numbers and a great outlook. So I believe in the company. So for me, I would like to wait and see what happens after November and after we have the CPI data, because then we know for sure how the stock market will price itself. And I believe going forward with the strong labor market and expectation of rate increases, we might see, there is a chance that we might see the stock price continue to consolidate within this level, or we might see the stock price go down. If it goes down below 40, that is definitely, for me at least, a buying opportunity. If we go over to the market, just take a quick glance on the US economy. We can see here that the indices are all in red, and also that we are moving in a negative channel and have been doing so for quite some time. And if we look at the sector, we can see that all sectors are red, and also the technology sector here is that we have been moving in a negative trend channel for quite some time, and it's all affected with the current economic stand. And we can see here the commodity is that energy prices with the OPEC Plus, when they cut the output with 2 million barrels per day, that pushed the price even higher. Now we are around $97 per barrel. So that is putting a lot of inflationary pressure. So guys, that's all I have for this episode. I truly hope you enjoyed this one. Please go ahead and give me a thumbs up, comment, and subscribe. And guys, guess what? We did it. We broke 300 levels. We are more than 300 subscribers now. Thank you so much for everything you have done for me, the support you have shown me, and thank you for engaging with the content. Thank you so much. But if you enjoyed this one, please go ahead and give me a thumbs up. And if there's any stock you want me to take a look at, just let me know and I'll make a video of that. As always, guys, thank you so much. Take care of yourself, and I hope to catch you on the next one. Okay? Thank you. Bye-bye.